Give me a few minutes and I'll show you a clean, rules-based pullback setup you can actually trade in real trends. Trend lines are subjective, and a single EMA cross can be late, so we'll use market bias to define the true trend and confirm pullbacks, and Williams %R to time the entry with a precise crossover. I'm on the 1-hour chart, but these rules work on any liquid market and any time frame. Risk to reward is fixed at 1 to 1.5, so results are easy to compare. First, I'll explain what a pullback really is. Then we'll add indicators, lock settings, run the long checklist with an example, do the short checklist with an example, and wrap with a fast recap so you can copy it step by step. While you're watching this, Supernova AI Bot is already trading, managing risk, and generating passive profit, 24/5 on full autopilot. No experience needed, my FX book verified, up to 15% monthly returns. Don't fall behind. Get Supernova now, link in the description. Okay, back to the chart. Open indicators. Add Market Bias by ProfessorX. Add Williams % range. That's it. 2 tools, 2 jobs. Market bias defines trend and objectively flags pullbacks. Williams %R gives the buy-sell timing with a crossover inside overbought-oversold zones. Indicators settings. Market bias, we will keep the default settings as they are best suited for our setup. Reading rule. The ribbon is built from smooth Heiken Ashi. Bright green equals normal bullish state. When a pullback forms in an uptrend, the ribbon flips to dark green. Bright red equals normal bearish state. During a pullback in a downtrend, the ribbon flips to dark red. Bright equals impulse. Dark equals pullback phase. Williams % range. Open settings. Style. Set upper band to -30. Change the color red, and change the display to line. Set lower band to -70, change the color to green, and change the display to line as well. Ensure the %R plot, yellow, is visible, with its default 13-period EMA signal line. Reading rule. A buy condition requires the yellow %R to cross above the blue EMA, while the cross occurs below -70. A sell condition requires the yellow to cross below the blue, while the cross occurs above -30. What is a pullback? In an uptrend, price doesn't rise in a straight line. It rotates from higher highs to higher lows. The move from a higher high down toward a higher low is the pullback. In a downtrend, it's the opposite. Trend lines can be subjective. Market bias removes that subjectivity by marking pullbacks with dark green, uptrend, or dark red, downtrend. Execution rules for all trades. Act on closed candles and enter on the next candle open. For longs, the stop goes below the most recent meaningful swing low. Pick a clear pivot from the last 5 to 10 candles. For shorts, the stop goes above the most recent meaningful swing high. Target is always 1.5 R. Long setup checklist. First, market bias shows an active uptrend. Ribbon is bright green and price is trading above it. Second, a pullback forms. Ribbon flips from bright green to dark green while price retraces but holds the bullish structure. Third, entry timing. The yellow % range crosses above the blue EMA and the cross happens below -70. At the moment of the cross, the market bias ribbon must still be dark green. We are still in the pullback phase. If the ribbon has already flipped back to bright green before the cross, the setup is invalid. When all 3 are true on a closed candle, we execute on the next open. Stop under the nearest swing low. Target 1.5 R. Long example. Trend is up, market bias is bright green, and price rides above the ribbon. We get a neat pullback. Ribbon flips to dark green while price dips to form a higher low. Inside that pullback, Williams' % range drops below -70. Then the yellow line crosses up through the blue EMA while still below -70. The ribbon remains dark green at the cross, so the entry qualifies. We enter long on the next open, place the stop under the pullback swing low, not under a tiny wick, and set the target at 1.5 R. Typical path: 1 or 2 bars of hesitation as the level is tested, then continuation as the ribbon flips back to bright green and price pushes out of the pullback. If the cross comes after the ribbon has already turned bright green, skip. Timing has shifted from pullback to impulse, and we wait for the next cycle. Short setup checklist. First, market bias shows an active downtrend. Ribbon is bright red and price is trading below it. Second, a pullback forms. Ribbon flips from bright red to dark red while price bounces but stays below bearish structure. Third, entry timing. The yellow % range crosses below the blue EMA and the cross happens above -30. At the moment of the cross, the market bias ribbon must still be dark red. If it's already bright red again, timing is late and we skip. When all three are true on a closed candle, we execute next open. Stop above the nearest swing high. Target 1.5 R. Short example. Bias is down. Market bias is bright red with price below the ribbon. A bounce develops and the ribbon shifts to dark red, marking the pullback. Williams' % range rises into the overbought area above -30. The yellow then crosses down through the blue EMA while still above -30. The ribbon remains dark red at the cross, so conditions align. We enter short on the next open, put the stop above the bounce swing high, and set 1.5 R as target. Two common outcomes: a steady slide that tags target while the ribbon flips back to bright red, or a pop that tags the stop. Both are part of the profile. Our edge is from only taking fully aligned pullback then trigger sequences and keeping risk per trade fixed. Final recap. Direction and objective pullback state from market bias. Bright equals impulse, dark equals pullback. In uptrends, wait for dark green and then require a Williams % range bullish cross below -70 before the ribbon turns bright again. In downtrends, wait for dark red and then require a bearish cross above -30 before the ribbon turns bright again. Execute on the next open, stop beyond structure, target 1.5 R. If any piece is missing, no trade. Trade the plan, not the impulse, and let consistency over the next 50 to 100 trades do the heavy lifting.